recording this session right now. We'll be able to watch it later as well, so that's all good. Starting off, questions on the trade recaps. Are you guys good? Ryan, Zach, any questions on that at all? Yeah, okay. We'll go through the 3-minute structure, and that will be the first kind of topic for today. And then we'll do our weekly outlooks as well, right? One thing, actually, before we start any of that, let's go through. I've just got it on my NAS 100. Let's go through market structure, right? Just a brief, very, very brief overview. I see a lot of people kind of doing it wrong, right? So very brief overview on market structure. We'll go into more depth as we go. So starting off, right, we have this blue line, okay? This blue line is our swing structure. So we have our higher high, lower low, lower high, lower low, lower high, and then we keep going, right? This is swing structure. Anything on the hour, 4 hour, daily, right? So if we're looking at an example like this, so something like this will be swing structure, okay? Now, you don't want to trade swing structure unless you're a swing trader, right? If you have trades, this is not what we want to be trading, right? These huge trades is not what we want to trade. What we want to trade is this internal structure here. So internal structure is, let's go 1, 3, and 15 minute, right? This is what we want to be trading, and I know some of you guys know that already, but this is exactly what we need, right? Now, what does that look like? Internal structure is just this, right? And the reason we want to be trading this is because this is quick. You don't want to be in trades for 3 to 4 days if that's not what we want to do, right? First key component to look at, right? I say we should be looking at continuation trades. Now, what does that mean? What does that mean? In terms of this structure, you can have continuation trades here or here, right? Irrespective of overall string structure, you can have continuation trades, right? Now, why? Because if we go here, right, we're bullish all the way up until we get to this point, right? Until we get to this point, we're bullish, right? And that's because we have our internal breaks, right? All the way through here. What we want to be doing is trying to catch these internal breaks until we get signals that price is about to change. And what is that signal? We have two, right? We have two indicators that price is going to change, and we should probably stop trading. And one, we know, is our internal change, right? Our internal change of structure. This is when we know, okay, price has shifted bearish, right? Should probably not be looking for buys. Second, our next indicator is, this is a good one. So it will be this, using our fib premium and discount levels, right? So all well and good to look for these continuations up within this section here. Why? Because we're low in the leg, right? You can say low in the leg because we have not made our way up yet, right? As we enter into past this 0.5 level, this is when you go, okay, I don't want to be taking any more buys until I see some type of retracement, because price is already retraced up. Now, what do we expect when we get into that zone? We expect a continuation lower, and I see a lot of you guys taking trades up here, right? It's very risky, and you can have the perfect structure, but it'll still be risky, right? I want you to take these trades down here, right? Down here and up here for shorts, okay? Now, if we go back to this structure, like we talked about, Zach, like you noticed, if this was a 15-minute structure, say this black is internal, right? 15-minute. This is not the kind of trade you want to be taking, right? And I'll go to the trade examples. You'll see on the end of day breakdown, these trades, the 15-minute, are riskier than if you were to take it on the 3-minute. Okay? Now that sounds counterintuitive, but I'll tell you why. Because the market isn't always perfect, right? We're not going to always get this. What we'll get is we'll get price move like that. You go to break even here, you get taken out of break even, you come down. You get like this, you get scared and you close your position too early. You know, price will move around. I don't want that. So, what do we want to focus on? Now, we want to focus on our 3-minute, right? 3-minute structure. So what does that look like? Imagine this blue line is the 15-minute structure, okay? And this black line is 3-minute structure, okay? So the market's a fractal, okay? If we see our 15-minute shift, so let's say we see something like this. So we see price come up like this, right? We see our 15-minute shift like that. What am I looking for in this leg? In that leg, I'm looking for price to come into that discount level, right? In the 15-minute leg, I'm looking for this pattern, right? This 3-minute IC. The 3-minute IC, you will very rarely get it come to the extreme, okay? And that's why we use our fib level. Does that make sense so far? Is what I'm saying, does that making sense so far? I just want to get your input to see if that's making sense or if it's not making sense at all. Okay. What are you confused on? Like, what's not clicking? Okay. So, for the 15-minute, right? The key theory is if we go to our AUD trade, right? Or my AUD trade. On the 16th, I think it was. 16th, somewhere here. Oh, I don't think I'd have it. I think I have it on the GJ though. 16, okay. Now, when I say the 3-minute is safer than the 15-minute, I don't mean in terms of volatility, right? I should have clarified that. The lower we go on the time frames, the riskier it is in terms of volatility. But the safer it is in terms of catching these clean directional moves because of the volatility. So let me give you a good example of this, okay? Say we have, even if we go lower, say we have 3-minute, like this structure, okay? Right? This is 3-minute structure, okay? Out of a 15-minute swing structure, this is 3-minute structure, right? So we have a move up like that, come down, come up, right? Now, do we have... Yes. So we had price come all the way into our golden zone, right? And what do you expect? When you expect that kind of movement up, you could see this, right? We have a change of character, you take your stop losses. But if you go, if you argue about news, that's fair enough. This is not something you can take. But on the 3-minute, hey now, On the 3 minute, let's say we have this, right? This is the trade I took. On the 3 minute, we have this structure break, an internal breakdown, right? I'm good, man. How are you? It's not. I can't hear you. Oh, good. I've also recorded this session as well, so you didn't miss out on much. You can watch the start of it when you can. Yeah, no stress. Okay, so as I was saying, in terms of probability, in my head, the way I'm telling you guys to look at it, it's a lot safer on the lower time frames because, right, we had our 3 minute internal break, right? After an internal break, what do you expect? You expect it to return to somewhat, right? To somewhat up here, okay? Now, we can't predict the markets, but what do we have? What piece of information do we have? We have a target, right? We have a target in mind, right? And then secondly, we know how the market moves. 8 times out of 10, we move like this, like we move in waves. So internal break, retracement, internal break, retracement. So we have two key points of information. This is not a concept. This is not an ICT concept, right? Or an SMC concept. It's just logical thinking, right? When you want to solve a problem, you need as much information as you can. We already have two pieces that we've figured out, okay? Internal break, expecting a move up, and then we have a profit target. Cool, right? No stress, bro. It's recorded anyway, so you can watch whatever you missed. Is that making sense so far, Zach? We have two pieces of key information, right? Essentially painting a picture. Right? Okay. So we have two key pieces of information. Now, if we drop down, what do I want to catch? I don't want to catch this. Look, you can wait for this, but I don't know if this is gonna happen at 2 in the morning, 3 in the morning, at 1 in the morning. I don't want to wait for that. What do I want to catch? I want to catch the move up, alright? If I'm already expecting it, okay? So I drop down to the 1 minute, and I wait. And I wait for clear shift in market order flow, right? So if we take, for example, this, right? How do we know we've had a shift? When there is an internal structure break, right? Now this is a clear internal structure break. Even on the 1 minute, it's super clear, okay? Same thing with this. We see price come all the way down. We have our little bit of demand come in, move up, come down. What I've been talking to you guys about, those double bottoms, right? We have this move up, come down, failure to go past this level and create this internal change of character, right? Now, okay, everything's kind of falling into place because what's my hypothesis, right? After a move down, price typically comes up and then I have a profit target here. So I'm bullish, right? On the 1 minute, what do I see? I see price create this IC. I'm more than happy to take the risk, right? Because I've seen this happen so many times. I've had this double bottom happen. I can take from that to that, right? I have my demand zone, my key demand zone that I see here, that broke structure. More than happy to take the trade like that, then aim for a demand zone up here. Now, yes, this is a 2R, but this is better than nothing. And then also, who am I to say it'll stop here? I can aim for up here and be happy with a 3, right? And then if you play it out, we actually moved really well. Kept going all the way up, right? So when I say the 3 minute is safer, I'm saying we have a lot more information in order to predict the moves, if that's making sense so far. Any questions on that? Yeah. Because my main thing that I want to get to you guys' head is make a story, right? Have a story of price. So to know where something is going, you need to know where it comes from, right? And that's why we look at the past. So we look at these past structure and we're trying to make a story here, okay? Even if we look at this section of price, okay? What do we have? Actually, let me give you the whole story, right? Why did we decide on, you know, buys for this? If we look at higher time frame price right now, what's the story right now? Story right now is, right, we're bullish. What's our target? What's our overall target? It's this, right? Why? Because price created this high, pulled back, and then we entered our little golden zone, right? I know this is Zach was talking about it. I know I traded this at the very start of my journey as well, like the fib retracement, which is a really nice strategy, and you call it the golden zone. So you pull into the golden zone, right? Now, what am I expecting? I don't want to take shorts once we pull in past this zone. Why? Because it's risky. It's a riskier trade. The probability is just not on your side. Okay? Now, what's the one piece of information we have now? That we're bullish, right? We're bullish now. I don't want to take sells. Next thing, what do we have? We have a target. The target is up here, okay? Next, what do we see? Clearly our internal structure, right? Because this is swing structure, this is internal structure, right? Anything between this and this is internal structure, right? We see our internal change of character, or you can call this a chock, it doesn't really matter because we're on the 4-hour time frame as well. We have our internal change within this swing structure. Okay. Next, what do we have? Because we entered into the zone, we created a change of character, we have a target, and we have our directional bias. You can say something like, okay, change of character, pretty confident buys. We can look for a retracement into this golden zone, look for buyers here, right? Cool. Even if you go in lower into the time frames, you can go, cool. Price came in, right? Price came in. We can look for some type of change of character, some type of buy that created this change of character or created this move, and take the buys here as well. Okay. Essentially, you're just creating this story of where price is going to go and where it might target, right? So that was kind of a little section on market structure and just trading with the trend, basically. That's all making sense? No questions, so I can move on to the next section, or the next agenda, which is when to trade and when not to trade, and then analyzing your trade journal as well. Yeah. Cool. Okay. Analyzing your trade journal. One of the major changes that I've made is integrating this fib, right? One thing I've done is integrating this fib into my trades. Now, why? Because through my journaling, I found that, hey, I had market structure marked out. I just wasn't getting into any trades, right? I was missing out on these trades. And I would just journal them. I would journal trade missed, did not come back to extreme, or did not come back to main POI. I'd have the photo of the POI. And then what I did was I was like, okay, so what's happening, right? Price is coming into some type of equilibrium point within that. What can I do? I can use a fib. I can use a fib to strain and get into my entries, right, better. So one main point is, let me just see if I have any journal entries. No, not really. Okay, that's right. So even with those forward tests, the main reason I tell you guys to forward test this stuff is because you will see information like that. So for example, let's say, okay, I'm missing too many trades. What kind of problems are you guys seeing right now, right? I just want your input here from like Ryan, Onel, Zach. What are your main issues with trading right now? What have you picked up that's limiting your risk reward or your wins or your losses? Yeah, it doesn't go to TP. Same as Zach. Yeah. Okay. So, sorry. Main thing. Let's start from the first one. Okay. So it doesn't go to your TP. I think you missed the first bit, Onel, when we talked about internal and swing structure. Okay. Watch the first part of this video. We talked about targeting. So not using 15-minute structure, using 3-minute and 1-minute. And it just became a more high probability setup. Right. Yeah, I'll put it out. Main thing I want to say just before we watch the video is the 15-minute structure and those higher time frame structures are very, for a day trader, is very, it's not promising. It's not safe is kind of the word I'm looking for. Because why? If we say, for example, right, we take a trade on the 15-minute time frame, okay? We're targeting up here, right? Targeting this high. If you take a trade like that, we have stop losses like that. Like we'll take a nice 1 to 3, right? What happens, right? We're pretty confident it'll come up. We have our change of character. We're like, okay, we'll go to break even, right? Price is pretty safe. If food melt, I'll be fine. Leave it overnight, and then you wake up, and then prices come down, taking you to break even, or just completely ruin your stop loss and come up, right? Now, why does that happen? Just because that's just how the market moves, okay? What I'm saying is I'd rather catch this to this than try and catch this to this, right? The more pips you target, the higher the risk that price is just going to move around. It's just plain and simple, okay? So go back and watch the start of it. What I want you to focus on is those 3-minute structures of continuation, as opposed to trying to catch those huge moves of absolutely you can catch these moves, but more than likely, you will get something like this happen, right? Get the trade, comes up, comes down, takes you to break even, okay? So watch the start of it. Again, yeah, that's targeting too much. We're talking at that point as well. Impatience. Look, impatience is a hard one, hey. One kind of strategy that I've been implementing is I very rarely sit down. Yeah, look, it's really hard because of that. Like I spoke about it on my TikTok video very briefly on my last one, that it's like you see Jack on TikTok. He's making 14R today, right? And then you're like, oh, why didn't I do that? Like, why didn't I take that trade? Maybe I'm just not, as focused as he is. But it's not that, right? I wanna pass this funded account, as quick as I can, right? That's the main reason you're gonna fail, right? Because of that comparison and because of that expectation. What I found is the less I really care about my accounts, not saying that I'm full porting it on a news day, but the less I care about the formality of my accounts, like I really don't care if I'll make $100 today or $200 or $300. I'm just gonna sit down, see if a trade comes up that I like, I'll take it. If not, I just won't take it. I'll just not trade today. So it's a really hard internal thing. You know, you have to kind of just get experience in the markets and do it. It's really hard to explain because it is such an individual battle. Main thing I'd say is just look on the charts less. Just be on the charts less. No, I fully agree. You put so much time into it, but I feel better. Like, if I look at my trading journal, right? This is what it looks like, right? Almost 8%, or almost $800, right? In the last 2 weeks. Out of 5 trades, out of 2 weeks, out of 14 days, I only took 6 trades, right? And that's more than most people make. That's a phase 1 right there, right? That's a phase 1 in 2 weeks, in 14 days, just out of 6 trades. And, if I tried to trade the Monday, Tuesday, Thursday, Friday, and then these weeks as well, I promise you I would not have made this money, So you just have to realize that the less you trade, the better it's going to be. You just have to not care, right? It's easier said than done, unfortunately. Yeah, and then just those quality setups, man. That's just all journaling. That's all journaling. Oh, Ryan's dropped out. Yeah, I wish I could help with the patience thing, but that really is such an individual battle. Okay, next. What are we talking about? Yeah, exactly. When to trade and when not to trade. I hope this will help with your impatience thing, right? Forcing trades, you will nuke your accounts doing that. I'm sure you guys know I've done it. I've nuked my accounts. Right? I remember a phase, like a funded challenge that I bought. I was risking 0.5 and I never made a single dollar on that account. Just because I was forcing it, right? Every single trade I took on that phase 1, using 0.5% risk. So 20 trades, never made a single dollar on any of those trades. Why? Because I was just forcing trades. I went back after I blew that account and I was like, what the fuck just happened, right? What just happened? And I went back and I was like, dude, these are the stupidest trades I've ever seen. Yeah. And then I'd take like 6 trades a day, right? I'd take 6 trades a day, traded almost every day of the week. And you just have to go back and just be disgusted with yourself, if I'm being honest. It sucks to say, but you just have to be disgusted with how you act. Yeah. Just go over your trades, expect better from yourself, if I'm being honest. Disgust will do a lot of things for you if you use it in the right way, right? So let's look at something, right? If we see something like this, okay, now if you're trading between this couple of weeks, so this week of trading, right, you see this and you're like, okay, we have the opportunity for buys, right? I missed my opportunity for buys here. I'm seeing price move, right? I'm seeing price move. What do I want? Like, what do I expect? Okay. It's very hard to get in an entry, right, where you're not risking everything. Like, where you're not having the riskiest trades possible. Like, yes, you can get in on something like this, but how risky is that? You're on the top of the leg, right, at the very top of structure, then you took a buy. That makes no sense, right? So let me go here. When you shouldn't trade is when you look at a chart and go, okay, so there's two possibilities this could go. This could either be a buy or a sell, right? For something like here, we are floating, right? If price is tanking, we're floating up here. There's no demand zones here. Which way could it go? We could keep going down, but we have no clear structure, and we could just come up like we did here, right? Imagine if you took sells here. So main thing with when to trade and when not to trade is just remember this important point. If price is confusing, if you have to go over the charts multiple times, it's just not worth it, right? Take the day off, look at a different pair, do something. Because the more you look at it, the more diluted it gets, okay? If you have to refresh your charts, take off all the drawings, have multiple possibilities, then just leave it. It's not worth the risk, right? You will have days where price is super clear. Those are the days you want to trade. There's nothing wrong with being confused on a chart, no issues at all. Even something like this, I have no idea what the fuck's gonna happen, right? This makes no sense to me. That's all right. If you look at something like this, right? Okay, we could have buys, right? We could have buys here, but what do we have? We come into this huge supply zone, right? That caused this huge move. We have wicks, and then also if you go down, what is this? This consolidation makes no sense. I'm not going to be trading AU, okay? So you guys have to be your own. You just have to be strict with yourselves. No reason to trade anything if it's unclear, if you have to refresh your charts multiple times. Yeah. Next, when we're using the 3-minute time frame, goes back to our internal structure. When we should use it is when we're catching these trades that are within swing structure. So if we want to catch a trade from here to here, right, 3-minute. If we want to catch a trade from here to here, 3-minute. Here to here, 3-minute. So it'll be at the start of the video. It'll start to make sense. Any questions you guys have so far? And then we'll move on to the weekly outlook after that. Yeah. Is there a way of guessing whether price will dig deeper in a demand zone or quickly tap and go? I find myself entering and I see the shittiest looking IC. Okay. Let me read that question. A couple of questions for you. So this is the question. Is there a way of guessing whether price will dig deeper into a demand zone or quickly tap it and go? Yes and no, but it's a convoluted answer. So you can talk about theories of liquidity, but in my opinion, if you're on these 3-minute time frames, right? If we're on the 3-minute time frame, there's no rule that says price will go here or it'll respond from here or it'll respond from here, right? There's no rule that says that. Now, the reason that you're entering on these shitty ICs, right? You can enter on a shitty IC, that's fine. So does price stop you out and then it keeps going your way, or what happens? Yeah. So the main reason is because we have So you say you have kind of this 3 minute demand zone, right? You will see if you keep seeing stops me out and goes the way I want in your journaling repeatedly, right? That signals to me, and what it signals when I see that in my journaling is my stop loss is too small. Okay? Now if I have something like this, perfect, right? Stop loss right below the demand. Like I'm covering the demand, left a couple of pips, but I got stopped at anyway, right? That just signals to me that your stop losses aren't big enough. That's all. You can enter in any shitty way you want. So even if I enter here, bro, right? This is a buy. Let me say, oh, I misjudged it. I enter here, right above that demand zone, right? As long as I have my stops below that low of structure, that's completely fine. That's completely fine. You can cop a break even or a 2R, but the main thing you should not do, right? You're just shooting yourself in the foot if you aren't managing your stop losses correctly, right? There's only a few things we can manage in trading: our stop loss and our take profit. That's it. You just put it and forget it, right? So even if you see something like this, you won't know if we go something like this, right? You won't know that price will come into here. You will never know, right? Maybe there is some liquidity concept there, but you won't know whether it will come into here and give you that play, right? But what you do know is we have our change of character, right? A demand zone created, right? And then what else do we have? We have a shift in order flow here. On the 3 minutes, probably easier to see. So as you can see, we have a shift in order flow. Why? Because the top of this was broken, okay? Now, you can either enter straight after that break, so something like that, with stops below, right? Or you can wait for a pullback somewhere into here, right? Main thing is if you keep saying that stops me and goes the way I want, your stop loss is too small. That's just it. Does that make sense? Yeah, cool as. Okay. Weekly outlooks, as I was talking about, AUD USD. I don't think I'll be trading this until we get some clear structure. Nothing really to look for. I do think we're bullish, but this is just not a good sign. Like I'd like to see it move up, come down, and then keep going. All right. Let me clear all the drawings. Now, this is a good example of creating a story. Okay. What do we have? We have our breaker structure. What do we have after a breaker structure? We have a retracement. Now, where are we expecting price to retrace to? Probably somewhere in this zone here, okay? We're expecting it to retrace somewhere into this zone. Now, what do we have? We have our 15-minute internal IC. Price came down. Price came down into, well, far into our golden zone. Created our internal. So now, what is our target? Our target isn't this. That's not our target. Our target is this, right? That's our target. Right now, as of right now, that's our target. Why? Because we have bullish structure. Okay, next. What do we have? We have bullish structure here as well. So we created our internal IC, right? We have an IC here. Internal IC, looking for a pullback into somewhere in this zone, which we did get. I'd be weary of this week. Again, I feel like Euro USD could go both ways. But for argument's sake, we'll say we've tapped into the zone, we're bullish, grab this liquidity here as well. What's our next target? So next target right now, realistically, is this. Any trades that I'm taking, this is where my take profit is going to be, right? It's not going to be this, it's going to be this. So we'll wait and see if we get more structure. If we get more structure on the 15 minutes, so say we get something like this, what I'm going to do is I'm going to go down to the 3 minute or the 1 minute and look for this move up. And then what's my take profit? This is my target, right? This is then going to be my targeted high. Then I'm going to leave a little bit, maybe like 10% of my position to target this and then this. So this is how you lower your targeted risk, as opposed to targeting up here and leaving yourself open to volatility. You bring yourself to here, next to here, then if you can, back up to the 15-minute protected high. So that's kind of what I'm expecting from that. GJ, let's look at it. Again, same kind of story, came into that golden zone, created that breaker structure, came down. We did create this change of character. Could look for sells here. I don't think we'll see anything with GJ until we get kind of deeper into the week. So that's kind of my assessment of the market for this week. Any final questions? Oh no? No, that's good. Okay, no stress at all. Yeah, this session I'll put up in the knowledge session so you guys can see it as well. But yeah, cheers. Thanks for coming. Hope that was informative. Have a look at it for what you missed as well. No worries. Cheers, guys. Have a good rest of your weekend. Take care.